Hello, good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very excited to welcome you to yet another promising edition on the Extra Speed Live. It's Friday, the last trading day of the week, and happy Friday to everyone out there. Well, before we kickstart the session, let's run through our daily routine to confirm that we are all on the same page. So, if you can see my screen, you can hear my voice loud and clear, please let me know in the comment section by typing in hi. So, you typing hi will make me confirm that we are all on the same page. So, I look forward to your comment. Please let me know we are good to go, and I load up my chat right now while I look forward to your comments. All right. So I can see a handful of comments here, though I don't know what language these are. I can see some which are looking like jargons here, but let's see what we have. I can see comment from Riquelme66. Thank you very much. Madeira, good morning to you. 704 good morning to you too. Adarol 1992, good morning, thank you very much. Lepi, good morning to you. Barugu, good morning to you, and glad to have you around with us. I see your comment 587888697. This looks like Carrie, the way the comment looks like. I hope it's Carrie. Good morning to you, and thank you very much. Well, in that regard, I would want to take this as a confirmation that we are all good to go this morning. And on this note, I welcome you once again to yet another promising edition on the Extra Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I take you on a trading journey into the financial landscape using simple fundamental tools such as trend lines, key levels, and of course, chart patterns to gain valuable insight into the historical price movements on the assets on our watch list for this week so far. So far this week, we have been monitoring four major assets since the week began, and in fact, we've been doing very well across board. And these assets includes the US All Spots. We have the USTech 100, which is popularly known as the Nasdaq. We also had the GBPUSD and of course the XAUUSD, which is popularly known as the gold spot. And all of them we've been doing very well, and I will be looking into how these assets have been doing and how we're going to be positioning ourselves ahead of the last New York trading session for the week. Well, today being Friday, there's going to be some psychological peculiarity as majority in the market who are taking advantage of the prior leading price action will be getting ready, rounding off on their positions as they prepare for the weekend. And this is going to be reflecting on the chart as price action doing a reversal that is moving in the opposite direction of the prior leading price action. So all of this will be taken into consideration as we take a technical dissection of the chart. For those who are joining us for the first time, you're highly welcome on board. I'm very excited to have you around with us this morning. If you don't know, well, what we simply do here as technical traders, we gather here on a daily basis ahead of the New York session where we come to review our trading positions to see how well they are doing. That is, if we have any, manage the positions while we also use the information we gather on the chart to position ourselves strategically ahead of the New York session. So this happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. I encourage you to stay tuned in and don't miss out on the valuable ideas we will be deliberating on today. And of course, be part of the subsequent editions, as the more time you spend with us, the better you get to understand how our strategy works here and eventually be able to use the information you gather in this community to make your own independent trading decisions. So, once again, you are highly welcome on board. So, with that being said, here, let's dive right into the business. And as usual, the first thing we normally do is to check on the economic calendar. And for those who don't know how important this is, well, for those who have been with me, you know how important it is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. So, on the economic calendar, we usually focus on high impact event from the economies that affects the asset on our watch list. And this economies, based on the asset we have this week, includes the US and the United Kingdom economic dockets. Now, if you look at what you have on your screen right now, I was able to pull out some handful of high impact event after including our medium impact event here. Well, the first one that came in today, Friday, October 13, was the speech from Governor Bailey's, which happened about 4 hours ago. I'm yet to have an highlight on what is said, but I'm of the opinion that we will be beginning to see some traction in the market as regards to this. We are going to be looking at how the market has reacted and how we intend to join the next phase of momentum during the New York session today. Then in about 2-3 hours from now, we are going to be witnessing ACA's speech. Well, ACA is the president and chief executive officer of the 3rd District Federal Reserve Bank at Philadelphia. So he's going to be giving a speech today. And of course, we want to be listening to what he's going to say, which will be giving us an insight into the economic outlook of the United States and, of course, monetary policies of the Federal Reserve. Then, in about 4 hours from now, we are going to be witnessing the Michigan publication of the Consumer Sentiment Index. And for those who don't know what this is, this index gauges the consumer confidence in the U.S. economy, which is a direct impact on consumer spending and economic growth, hereby influencing market sentiment and asset prices. Now, generally speaking, a high reading is considered to be positive for the U.S. economy, which in the long run will be affecting the U.S. dollar positively. Now, if we look at the previous data here, it came in at 68.1, and there is a general consensus projecting 67.4 for the month of October, which is a sign that there is likely going to be a contraction in that sector. So we are going to be looking forward to what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? Then we also have the UOM 5-year consumer inflation expectations. We also have a speech from ConLife, that is from the Bank of England's representative there, which is coming up much more later today. And in about 8 hours from now, we are going to be witnessing the publication of the monthly budget statement from the US economy. And for those who don't know, the data here is not promising at all. This budget statement summarizes the financial activities of federal entities, disbursing officers, and Federal Reserve banks. And a positive budget statement statement that receipts exceed projected outlays is seen as bullish for the US dollar. Now, if we look at the data being projected here by economists, we have a deficit of $78.6 billion as against the previous month that had a positive of 89 billion. So it doesn't look promising at all in this case scenario. So we're going to be looking forward to what the actual data is going to be like. But as technical traders, with the information we have gathered here, all we want to be doing is to sniff through the current market structure to see how we can strategically position ourselves ahead of this event using simple parameters such as trend lines, key levels, and chart patterns. And of course, we know that the anticipation of these events alone has a tendency of influencing the market sentiment, which will dovetail on the chart as price action. Now, talking about price action, the first asset we are going to be taking for today is going to be the US All Spot. And so far this week, we have been doing very, very well on the US All Spot. Remember, the week started on a very sluggish note where we saw price consolidating within a range that is between the 85.15 level and the $83.80 level for the major part of this week before we saw the breakdown happen on Wednesday, which of course we did took advantage of, giving us about 200 pips in profit from that sell position alone. However, yesterday we noticed that price action appeared to have come back to retest the ascending trend line we spotted during our live session on Monday. Now, to give you a quick review of what things are looking like and what's projected, the idea that we might likely be seeing a bullish momentum in the last couple of days. Now, the first thing we noticed at the beginning of the week was this descending trend line we spotted here, and in fact at the beginning of this week we saw our price did break out of the descending trend line, and we saw the transition of price action into a consolidation phase, going back to retest the trend line that was broken, and the appearance of buy pressure above this trend line was all we needed to get ready for an opportunity to buy. And during our live session yesterday, remember that we acknowledged the $83.15 level where we said a breakout of structure will be welcoming buying opportunities in this particular market. Now, during yesterday's, the market experienced a failed rally, which can be attributed to the immediate reaction to the US government's report of a record high production in stockpile for last week's production period. However, it is worth noting that the price action has managed to find support around the $81.50 level, as you will be seeing right here. So let me give a visual representation here so we can see the $81.50 zone here. Remember, we had a buy position yesterday. We saw the bearish traction bringing price back into that structure. Now, the inability of price action to break down that $81.50 level is a red flag that this area could be serving as a strong platform for an uptrend continuation. And with the look at what happened here on Thursday morning, we saw that sellers found it difficult to break through the structure, and during the New York session yesterday we saw buy pressure resume around that area, and as a result of this I labeled that zone a temporary demand zone where we shall be looking out for uptrend situation go on here. Now, in the last 1, 2, 3, 4, 5, 6, 7 hours, we have seen bullish traction resume around that area as price action has broken out of very important levels such as the $83.15 level, which we projected here yesterday. We had the $83.80 level broken to the upside. We also had the $84.35 level broken, and right now price is gradually approaching the $85.15 level. Now, for those who are taking advantage of this bullish opportunity here, you will currently be running with a minimum of 1, 2, 3, 4 positions at this point in time. Now, if we look at the number of pips here, the first position will be running with about 280 pips in profit. The second position about 190 pips. That's a total of 470 pips. Then we also have the third position running with about 120 pips, giving us roughly 700 pips right now, and about 74 pips on the last position here. So we currently have about 800 pips running in profit just in the last 24 hours. So that's quite a phenomenal feat right here as we head towards the end of the week. Now, for those who took advantage of this opportunity, well done, and kudos to you for being on standby to capitalize on this move. Now, the next thing we want to be doing right now, of course, whenever price moves considerably well in our favor, we want to be moving our stop losses to secure the current buy position. And to secure our positions here, we do want to be moving our stop losses to anywhere between the $84.30 level and the $83.50 area. Let's give enough room for price action to breathe while we continue to monitor price action from this area. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? I'm of the opinion that because of the assurance by the by the Saudi Arabia-led OPEC Plus bloc, I'm of the opinion that we are likely going to be seeing an uptrend scenario, as we have confidence from them that they are making sure that there is stability in the supply of crude oil across the globe. And if there's going to be this positive assurance and there is a reflection of supply in the market, then there is going to be a more bet on the US oil spot so far. But from a technical standpoint, let's see what we are going to be planning ahead of today's New York session. Now, the first thing I would like us to do here is to look at the structure from an holistic standpoint. Now, looking at the structure here, I'm beginning to see something like a reversal pattern here in the form of a double bottom structure, where that level at the $83.80 level, a level which was initially our support line at the beginning of the week, will be serving as the neckline of this structure. Now, with the neckline identified here, a breakout of the structure is definitely going to be affirming and validating that double bottom structure has a reversal pattern. Now, we already saw the breakout of the structure happen about 3 hours ago, and right now this has validated the reversal pattern, and I'm of the opinion that we will be maintaining a bullish bias on the US oil spot today. However, for those who had missed out on this opportunity, what is going to be our plans to be part of this uptrend move? Well, since we have a neckline here at the $83.80 level, from a technical standpoint, when price breaks out of the neckline of a reversal pattern, we expect that at some point in time we are likely going to be seeing price retrace back into structure to inside an uptrend scenario. Now, let's see if the market will come back into structure and retest it. If it comes back, then we do want to be getting ready to join an uptrend move. However, if price refuses to drop back into the neckline and instead it continues to find higher highs and higher lows, then a breakout retest of the $85.15 level will be welcoming more buying opportunities in this market. Now, for those who are joining us for the first time, I will encourage you to exercise patience and wait for a retest of the $85.15 level to join that uptrend move. However, for those who have been part of this profitable journey since the beginning of the week, then you can afford to leverage on the profit we have made so far this week to test waters above the $85.15 area. So you, in that regard, you can afford to have a buy stop order above the structure. So in case it doesn't work out, you know that you're only risking some of the profit you've made so far this week and not touching your real portfolio at all. But for those who are joining us for the first time, please wait for a retest of structure as soon as the breakout of the $85.15 level happen. So on the US All Spot today, we maintain a bullish bias, so we continue to look out for market conditions that will support the idea of buying this asset for today's trading session. So these are my views here on the US All Spot this morning. So if you have any questions or you need me to do some further clarifications or shed more light to an aspect here, feel free to let me know in the comment section below. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today's session. All right. So, in the absence of no questions, I want to assume that we are all on the same page here. And in that regard, we'll be moving on to the next financial asset on our watch list for today's session. All right, so the next asset on our watch list for today is the USTech 100, which is popularly known as the NASDAQ. And on the USTech 100, we've done pretty well this week. Remember, we were initially buying this asset at the beginning of the week, and in fact, we had some multiple entries. I think we had it about 1, 2, 3 more positions on this one before the bearish momentum we noticed here happened yesterday. So let me take you through what really happened at the beginning of the week and what led to the decisions we made of buying this asset this week. So at the beginning of the week, we had a simple setup. As you will see right here, price action was initially confined within this range around the 14,900 and the 14,840 level to emphasize the level of uncertainty in this market at that point in time. And of course, you know how we do it in this community. When price action falls into this kind of range, we do want to be exercising patience, waiting for a signal to come, which of course always comes either in the form of a breakdown retest of the support line of that range to give us an opportunity to buy, or the breakout retest of the resistance line to welcome buying opportunity. And instead, you saw what happened on Monday. We saw price break out of the resistance line at the 14,900 area to trigger our first buy position for the week. And since that moment, we have been buying this asset. As you see, we marked out levels such as the $15,000 area. We also marked out another level at the 15,100 and finally the 15,250 level to maximize the potential of this bullish move. And on all of this position, we were able to scoop in over 500 pips in profit on the US Tech 100. Before yesterday's trading session, I was telling us that we might likely be seeing some bearish move happen here. Now, during our live session yesterday, we marked out this resistant level where we said a breakout retest of that structure will be welcoming more buy positions, and that if price action drops in such a way that it breaches the 15,250 level, which interestingly lines up with that descending trend line we identified on the higher time frame. We are going to be looking at that in a moment. We said we will be looking out for selling opportunities, and lo and behold, we saw how prices sliced through the structure with an engulfing bearish traction to incite a market shift in this point in time. And for those who took advantage of the sell position, you will currently be running with about 140 pips in profit. And at this point, I will suggest that you move all stop losses around the 15,000 to around the 15,200 area. Give enough room for price action to breathe, with the hopes that price will continue to the downside. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? The way things are going right now, it appears that price action is likely going to be continuing the nosedive to the downside, as you will see that price appeared to have broken down that ascending trend line which was supporting our bullish idea since the beginning of the week. And of course, when price breaks down a key trend line such as this one, we expect that some point in time price may come back to retest the structure to incite the downtrend continuation here. So let's see if the market will really come back and do the retest of structure, or it will continue to break down the 15,100 to incite more selling opportunities. However, I think it is important that we also quickly take a look at the higher time frame, so we can be rest assured that we are on the same page here. So scaling up into the daily time frame, let's start from the daily time frame so that those who missed out on our first session for this week will be on the same page with us here. Now, on the daily time frame, this is what we saw at the beginning of the week. Now, remember, we acknowledged that price action has been on a bullish trend since the beginning of the year. And in fact, we have an ascending trend line to buttress the strength of the buyers at this point in time. Now, price has consistently respected the structure, but something interesting happened during the mid-month of September as we saw price break down that ascending trend line for the first time this year. And with the breakdown of that structure, we saw price drop into this level at the 14,550, a level which we acknowledged in the last couple of weeks has a strong demand zone, considering how price action had reacted to that level since the month of June. Now, from a technical standpoint, whenever price breaks down a trend line like this, we expect that some point in time price will come back, retest the structure to incite a downtrend scenario. And if you look at what has been going on here in the last 8 hours now, 8 to 10 hours now, you will see that we begin to notice some resumption of sell pressure around that 15,250 level, a level which interestingly shares a confluence with that descending trend line we spotted here. Remember, this descending trend line here had played a major role in pushing price to the downside, hereby giving us lower highs along the line. Now, with price action back into that structure, you will agree with me that we are at a crucial juncture in the market where anything that happens here will determine where price will be going next. And I think I emphasized on the structure here yesterday, as I said, if selling pressure resumes below or around the 15,250, we are likely going to be seeing a bearish momentum. And if price breaks out of that 15,250 and that descending trend line, we might likely be seeing an uptrend scenario. Now, look at what has been going on here. Now, for us to see things clearly, let's scale down a little further to the 4 hours time frame here. And while my chart is trying to load up, okay, here we go. So right now on the 4 hours time frame, look at what happened. So this is the descending trend line here, which we spotted at the beginning of the week. And look at what is going on here. Selling pressure, engulfing bearish candle, psychological level 15,250, all screaming a bearish setup at this point in time. Now, with a level situated at the 15,100, a level which has been a buying niche in the last 1 week here. Hold on a sec. Okay, since the beginning of this week, this level has played a major role in negating all attempt by the sellers to break through that area. And right now, price is back into that 15,100 area. So going into the New York session today, this level here is going to be playing a major role in determining the next line of action. So the question going into the New York session today is, will the 15,100 remain a buying niche just as it has been doing since the beginning of the week, or are we going to be seeing a breakdown of the structure to incite a sell-off? Now, with this being said here, remember that we already saw a breakdown of this ascending trend line, and right now price approaching the 15,100 for me is a sign that sellers might likely be pushing price further to the downside. So a breakdown retest of the 15,100 on our lower time frame will be a beautiful signal to join a bearish momentum from here. So let's see how the market would react to the 15,100. Breakdown retest welcomes selling opportunities, and if buy pressure resumes above the 15,100 in such a way that we begin to see something like this, then I want to wait and see price come back to retest the structure to incite a downtrend move. Now, if you are a counter trend trader and probably you are a scalper, that is a short-term trader, you might want to capitalize on this buy pressure here with about 130 to 40 pips advantage here back into structure, where we want to wait and see if it's going to be retesting the structure to incite a downtrend or break out of that structure to incite an uptrend continuation. So patience is required here. Our center of focus for today is basically between the 15,250 and the 15,100 area, and like I said, a breakdown retest of the 15,100 will be inciting a bearish momentum, which appears to be what could happen today, considering the momentum since the beginning of the week. And those who had bought, let's say when they bought at the cheap price at the 14,850, will likely want to be doing some profit taking activity, rounding off their positions ahead of the weekend, which would reflect on the chart as a retracement into structure. So let's see how the market will play out. Mark out these levels on your chart, exercise patience, and wait for structures to mature before jumping into any positions here. So these are my views on the US Tech 100 today. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I'm going to be taking the next 10 to 15 seconds to wait and see if there are inquiries from you or questions whatsoever before we move right into the next asset on our watch list. And you can use that time also to mark out these levels on your chart. All right. So, in the absence of no questions, I want to assume that we are all on the same page here. And on that note, I will be moving on to the next asset on our watch list. So, the next asset on our watch list for today is the GBPUSD, the cable market, of course. And in fact, in the last 24 hours, we had a phenomenal bearish momentum, which we, of course, took advantage of based on the projection we had during our live session yesterday. And we currently have four profitable sell positions running right now, totaling approximately over 200 pips in profit as the pair continued its decline, breaking our crucial ascending trend line that had been supporting our bullish momentum since the beginning of the week. Well, the fundamental factor behind this persistent pressure is as a result of the strengthening of the US dollar due to the recent US inflation data and prevailing risk aversion sentiment that's incited yesterday. And as a result of this, we have the situation going right now. So I would love to take us through how the week started and what led to the situation we have right now for educational purposes and for those who are joining us for the first time to be on the same page with us. Now, let us look at the structure closely here. At the beginning of the week, we were more of selling the GBP though price did not really move well as we sold about it moved about 35 pips before the bullish pressure began. And remember that we had this descending trend line as our yardstick guiding our bearish momentum at the beginning of the week, and we moved our stop loss accordingly. And one of the things we agreed here on Monday was that if price will break out of that descending trend line, then we want to get ready to buy the asset. So we saw price broke out of the structure, taking us out of our sell position at a worst case scenario break even, and we saw our first buy position triggered at the breakout of the 1.2200 level. Then we continue to add more buy positions, had the 1.22360, the 1.22650 level, and of course the 1.2300 area to milk that bullish momentum all the way into that zone. However, something interesting began to come up on the chart during the prior to our live session yesterday, and I emphasized this very well. Now, the first thing we observed during our live session yesterday was the sell pressure that resumed around the 1.234. Now, the attempt by the buyers to break out of the structure was negated by the sellers, and during our live session yesterday, we also acknowledged the inability of buyers to break out of the previous high as a red flag that could incite a bearish momentum. And to guide our trading activity for yesterday's trading session, we re-emphasized the importance of this ascending trend line, and that if price still remains above the ascending trend line, then a breakout retest of the 1.234 will be welcoming more buying opportunity. And of course, this never happened, and instead we saw price break down the ascending trend line, lining up with our expectations, and a retest of structure was all that we needed to confirm a bearish signal. And since that moment, we have been selling, riding that move all the way to the downside and adding more positions at the breakout of levels that we identified yesterday at the 1.22650, 1.22360, and of course the 1.2200 area to maximize the bearish momentum to the downside. And for those who took advantage of this opportunity as well, well done, and kudos to you for being on standby to capitalize on this bearish momentum. And as it is right now, it is very important that we move all stop losses to secure this current sell position as it is right now. And if you still have your sell position running, kindly move all stop losses to anywhere just right above the 1.22100 area. Secure these positions while we wait and see how the market would react to this current structure. And also remember that it is needed that we give enough room for price action to breathe. So now with a well secured position, what is going to be our plans for today? Well, personally, I already had my sell positions taken out during the early hours of today after I moved my stop loss, and I indeed had a buy position triggered above the 1.22100 area, but unfortunately, I'm currently running in a loss right now. So I will be sharing with you what led to that decision and how we can actually capitalize or maximize any opportunities around here. Now, before I go into the details on this 1 hour time frame, I would love that we take a quick holistic view of what is going on in this market on the higher time frame. Now, for those who are not part of our live session, this is an opportunity for you to be on the same page with us. So the first thing we did at the beginning of the week was to run through the 4 hours time frame where we were able to spot a bearish trend. And interesting enough, we saw how the lower lows and lower highs here transitioned into a descending channel. As you will see, after connecting the series of lower highs, we had the resistant line of that descending channel, and after connecting the series of lower lows, we have the support line of that descending channel. And during the later part of last week's trading session, we witnessed the breakout retest of that resistant line of the descending channel, which gave us a signal that we are likely going bullish for this week. And this, of course, was one of the criteria and condition that supported the idea of buying the GBPUSD this week. Now, with the way things are going right now, we saw price break down that bullish trend line, bringing price back into our key level for the week, which was situated along the 1.21800 area. Now, one interesting thing about our key level is that it also shares a beautiful confluence with this ascending trend line that was supporting this bullish momentum since last week, Tuesday. Now, when we connected the higher lows here, so we had a low right here, we had another low here, we had a trend line. And right now, despite the strong bearish momentum we witnessed in the last 24 hours, price is back into this beautiful confluence where both the ascending trend line and the key level at the 1.21800 area meet, making a sweet spot to look out for trading opportunity. Now, you would agree with me that at this juncture, we are at a crucial point where, depending on how price reacts to this zone, will be determining what our next line of action will be. Now, going into the New York session today, we are faced with two questions here. The first one here is, will price respect this ascending trend line one more time, where the appearance of buy pressure or a reversal pattern here will incite the uptrend continuation that started last week, or are we going to be seeing the breakdown of that key level at the 1.218, where a retest of structure will be all we need to confirm that sellers are likely pushing price further to the downside? So we are at a very crucial juncture, and this is one of the reasons why I bought the GBPUSD earlier today, because of the buy pressure that has resumed along the 1.218 and of course the ascending trend line. Now let's scale down into the 1 hour time frame to see what I saw and how we are going to be planning for today's New York session. Now, scaling down into the 1 hour time frame, my chart is loading up right. Okay, so here we are. Now, what I saw this morning was quite interesting. As you will see, that after this bearish impulsive move that brought us into this point, and as soon as price got into the trend line and the 1.218, we saw some buy pressure resume, and I was seeing something like a reversal pattern in the form of a double bottom structure. And with this marked out, the next thing we want to do is to identify the neckline, which I was able to place around the 1.22100 area. And of course, I was waiting for the breakout of the structure to capitalize on that move. So since I'm profitable so far this week with the ability to leverage on some of the profit I had so far this week, I placed a buy stop order above that area, where while I had a stop loss sitting somewhere below the previous low here, dovetailing to about 35 to 40 pips thereabout on this one, and price got my position triggered. We saw this bearish momentum come back into the 1.218, and currently I'm running with a loss of about 25-30 pips at this point in time. So that is why I was in a loss, but I'm still holding on to a bullish bias here instead. But if you still get to take advantage of this, I would advise that having a buy stop order above the 1.22100 area still looks promising to join the uptrend move. However, in as much as I'm still holding on to a bullish bias here, we cannot ignore the potentials of the sellers. This market has been bearish in the last 24 hours, and if I see a situation here where the buy pressure around this key level at the 1.218 is taken out by a breakdown of structure, then I'm of the opinion that we are likely going to be seeing a downtrend continuation, and this will negate the bullish idea. Retest of structure will be a beautiful opportunity to join a bearish move. So anywhere below the 1.218, our key level for this week, is where we look out for selling opportunity today. And if price breaks above the 1.221, we welcome buying opportunities. So our center of focus for today is basically between the 1.22100 area and the 1.218. Now, depending on the direction of the breakout here, will determine where price will be closing for this week. So these are my views on the GBPUSD. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So if you have any questions as regards to the current setup, or probably you need me to shed more light in my explanations, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while you also take that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today's New York session. All right. So in the absence of no questions, I want to take this as a confirmation that we are all on the same page. So I can see a couple of comments in the comment box, which I'm telling you are spams, and I do not advise you to listen to any instruction from these people mentioning or referring you to another platform for trading signals. They are spams, and Extreme Speed will not be liable for any of these links that you are seeing in the comment section. So please be very mindful of this and ensure that you don't get fall into spammers and fraudulent transactions such as the ones you are seeing in the comment section. So with that being said here, I can see your comments. Saeed is asking, can I know anything about Extreme Speed? Well, I will be advising you to Google them, Google the website of Extreme Speed to get more information. Well, Extreme Speed is a broker and is a forex broker, and they have access to you have access to quite a lot of instruments, expanding from commodities, currency pairs, and cryptocurrencies and the likes, and options too, of course, which you can also trade on the platform. So I would just advise you to take a moment to Google or check the contact center, which you can see on the front home page of this platform you are using right now. You will see the logo of a head with a headset. Click on it. It will link you up with the contact center where you can ask further question on. So with that being said here, let's dive right into the next and the last asset for today's trading session. So the next and last asset for today is my favorite, and that is the XAUUSD, which is popularly known as the gold spot. And we begin to witness another traction, bullish traction in favor of the gold. Well, in a surprising turn of events, the market had shown resilience after what initially seemed like a breakdown of that our ascending trend line, which was incited by yesterday's US consumer price index inflation reading, which indicated higher inflation than investors had anticipated. Now, this unexpected turn prompted a swift rebound in the US dollars as investors were speculating that the Federal Reserve might consider further interest rate hikes in November due to the ongoing challenges in easing inflation pressure in the United States. Now, from a technical standpoint, remember that we have been buying the XAUUSD since the beginning of the week, and in fact, we also had an ascending trend line which was supporting the bullish idea we had since the beginning of the week. And not until yesterday that we witnessed this strong bearish momentum that took us out of all our buy positions. At least if you had moved your stop loss like I projected us to do yesterday, you must have been taken out with a minimum of between 350 to 400 pips in profits on the three positions we had running since the beginning of the week. Now, for the sake of clarity and for those who are not part of our live session prior to this one, let's run through what really led to the idea of buying this asset this week. Now, at the beginning of this week, we acknowledge a range where price was initially confined between the 1,855 level and the $1,846 level, which gives us a clue into the uncertainty that gripped the market at the beginning of the week. Now, we waited for either the breakout or breakdown of that range to give us an opportunity to trade, and of course, we saw price break out and retested that resistant line of that range at the 1,855 level, giving us our first buy position for the week. Now, for those who missed out on that one, the market was kind enough as we saw it come back, retest the structure to incite the uptrend continuation. And in fact, we had multiple entries as we had breakout of levels such as the 1,865 and the $1,874 area to maximize the potential of that bullish move. And once again, well done and congratulations to everyone who had been part of this profitable journey. Now, yesterday we saw the breakdown of the ascending trend line for the first time, but immediately this morning we saw price climb above that structure, triggering more opportunities. Personally, I missed out on that opportunity as this whole transaction here happened during the early hours of today, which I was fast asleep when this happened. So what I did here was to position myself above the resistance line here, which was at this time this morning, it was the highest point price action has been for this week. That is the 1,885 level. So I was looking forward to the breakout of that structure to add more position to my existing trade. And if you are taking advantage of that one, well done to you for being on standby to capitalize on that move. However, if you had missed out on this opportunity, well, there is no cause to worry, as we might still likely see some retracement happen at this point in time. Now, to get prepared for the New York session, how do we intend to position ourselves for the next move? Now, with the way things are going right now, this ascending trend line is still going to be playing a major role in determining our trading decisions for today's trading session. And of course, you know how we treat our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall feel comfortable in our buy positions while we look out for more opportunities to buy. And like I was saying earlier, we might still see some selling pressure resume here, bringing price back into either the 1,885 level or the ascending trend line here to incite another wave of bullish momentum. So the possibilities of a reversal, a retracement could still happen here. So let's keep that in mind while we position ourselves for the next move. Then if price does not drop to retest the 1,885, then there is this level here where I noticed selling pressure the last hour. That is the 1,890 zone. So you do want to be marking that level out on your chart right now, as a breakout retest of this level will be welcoming more buying opportunities in this market. And for those who are very profitable so far this week, you can afford to leverage on the profit you had made so far this week by placing a buy stop order above the 1,890 to capitalize on the uptrend scenario. So one thing simply that we will be looking to guide our trading decisions for today is the fact that price still remains above that ascending trend line and will remain bullish on this one. Now, if we take into consideration the escalation in the Middle East, that is the Hamas-Israeli war, which is going on right now, there is a tendency that majority in the market will want to be moving their capitals into safe havens such as the gold, as you will see here. So majority will be moving their funds from currencies to safe havens, so which is on the safer side, you know. And because of this fundamental reason, I'm of the opinion that the gold will continue to rise to the upside. However, in as much as we're looking out for buying opportunity, in as much as we're looking out for bullish expectations in this market, we cannot ignore the potentials that sellers could come in. And in fact, we don't know how the market is going to be reacting to the data of the Consumer Sentiment Index, which will be published by the University of Michigan in about an hour or two from now. And this could incite some selling pressure, maybe into a situation where it drops and breaks down the ascending trend line to incite a sell-off here. Now, the only condition that will make me want to be selling the XAUUSD today is for price to break down that ascending trend line, which I doubt will happen at all. But if it happens, we do want to be on standby to capitalize on that move. So remember, the only condition that will make us sell the XAUUSD today is for price to break down, retest that ascending trend line. But as long as price still remains above that ascending trend line, we hold on to our bullish buyers here. So these are my views here on the XAUUSD for today's trading session. It's a simple setup. Mark out the ascending trend line, mark out the 1,885 and the 1,890, as you will be needing these levels and trend lines as a reference point to guide your independent trading decisions for today's New York session. So these are my views here. I don't know if you have any questions or you need me to shed more light in a particular aspect you still find it difficult to understand. Feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds as always to see if there are any questions while you use that time to mark out these levels on your charts. All right, all right. So, in the absence of no questions, I want to take this as a confirmation that we are all good to go today. And it has been a wonderful moment with you this morning. I really appreciate every single time I have spent with you guys. And during the course of an hour or so, we were able to attend to four major assets, which has been what we have been monitoring since the beginning of the week, which includes the US All Spot, the US Tech 100, which is popularly known as the NASDAQ, and of course the GBPUSD and the XAUUSD, popularly known as the Gold Spot, and all of which we were able to identify simple setup using fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insight and using this information to position ourselves strategically ahead of the New York session today. And I'm very confident that with the simulations we have here, and if you allow your setups to mature, we'll definitely be smiling to the banks at the end of today's trading session. So for those who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And I encourage you to be part of the subsequent editions, as the more time you spend with us here, the better you get to understand how our strategy works and eventually be able to use the information you gathered in this community to make your own independent trading decisions. So, once again, I welcome you and I look forward to seeing more of you in our subsequent editions. So, on this note, I want to wish everyone in this community best of luck today. And I look forward to seeing you on Monday morning when we shall be coming back here to take another fresh new look at the financial market. So, do have a wonderful evening, everyone. Do have a wonderful weekend and see you all on Monday morning. Bye bye.